Hello friends, let us start with accounting ratios. Good morning everyone. I started a fresh recording, so again I have to wish you now. Whenever you see after 1 month or so that time, RAR sir did not wish us also. Where you are going to remember that day. Okay, that we in the middle of the lecture one topic got over, so we started with the fresh recording. Vishal, Vishal is becoming poetic, actually. Okay, fine. Let us start, people. So today we are going to talk about accounting ratios. So you know what is a ratio? What a question, sir. A ratio comprises of how many numbers? Two numbers. One is numerator, the other one is what? Denominator. So you're taking for maths. Again, no, see, ratios are basically numbers, right? So those who have some allergy with calculation, like, sorry. Okay, jokes apart, guys. Let's get into it. See, why? Okay, what does a ratio do? It is the relationship between two variables to arrive at what? A meaningful result. What do we mean by that? See, absolute numbers, no, absolute numbers, figures do not communicate any meaningful result. Means what, sir? Absolute numbers do not communicate any meaningful result. Means what you have to say, sir? Okay, I'll tell you what I want to say. See, what happens? We take two examples. Okay. First example, business. Okay. Let's say there are two companies, A Limited, B Limited. Okay. And I tell you that the net profit of A Limited is 2 lakh. Okay. And that of B Limited is 5 lakh. Okay, fine. Now, if I ask you a simple question, which company has higher profit? If I ask you a simple question, which company has higher profit? Can you answer this? B Limited? Right? Looking at the numbers also, you can tell me that yes, sir, B Limited has a higher profit. Okay, done, fine. Now I revise this question a little and I ask you, dear friends, tell me which company is having better profitability? Which company has a better profitability? Who's more efficient? Can you tell me that? So you are going to tell me, so this data now is not sufficient. This data is not sufficient, sir, to conclude that who's more efficient. So, sir, you will have to give at least you have to share with us the details of the net sales. Correct? So now I share with you the details of net sales, and let's say the net sales over here is 8 lakh. Okay, and the net sales over here is 50 lakh. Now, can you tell me who's more efficient? To arrive at any meaningful result, what we will have to do? We will have to convert this in the form of a ratio. Ratio of net sales with that of a ratio of net profit with that of net sales is nothing but net profit ratio. Correct, friends? So what we will do, we will convert this, okay, we will convert this into a ratio. We will calculate net profit ratio, which is calculated as net profit upon what? Net sales into 100. So if you do that, this will become 25% and this becomes only 10%. So now you know who is more efficient. The more efficient is A Limited. Did you understand that? Right? See, this is what is the significance of ratio. Correct? See, in student life also, okay, other than this, you must have experienced one ratio always. Or the whole student life you fight for that ratio. Percentage of marks obtained. Ah, the whole student life from the day your school life or preschool life begins, no, that that percentage of marks obtained haunts you throughout. So what is this percentage of marks obtained? This is a second example, okay, of a percentage of marks. Don't you think this also is a ratio only? Here, the net profit ratio was an indicator of the financial efficiency of the company. Your percentage of mark shows your academic efficiency, right? How you calculate the percentage of marks? You say, sir, we will take in numerator marks obtained upon what? Total marks or maximum marks, correct? This is how you calculate this percentage, right now. Agree, people? You know what happens? See, in 10th standard also, different states have different boards. Each state has its state board. Then we have ICSE, we have CBSE, we have IGCSE, and a whole lot of things. So what is done at that? Everything is converted into what percentage? So it becomes easy to compare, right? Okay. Now, when we talk about comparison, how comparison happen? Tell me. Comparison happens in two ways. Like you present your mark sheet to your parents. Okay. Then your parents asked, hey, how much that Chintu got, how much that Sonu got, how much that Monu got. Huh? They are getting 95%, 96%, 97%, and you get only 91. She, very bad. One comparison. Okay. What is the other comparison? You get your own mark sheet. Okay. Ninth standard mark sheet. And ninth standard is generally tough. So you get 80%. Then parents take out your first standard result. What you are doing? First standard used to get 99. Second standard you got 98, and now you just get only 80%. Very bad, very bad. Okay, fine. The example is to convey you. There are two. What Shri wants? Shri is raising hand. Prasanna, what happened? You want to talk to me? No, Acha. I okay. Hi. So, what this example conveys you that there can be two ways of comparison. That is what I want to tell you. Okay, you can compare one company's performance with that of the other company, right? Also, what can be done? The company can compare its own performance with that of its own past performance. Understood? There are two ways of comparison: external comparison, internal comparison. Company compares its own performance with some other company, external comparison. And internal comparison, where were we 5 years ago? What was our GP ratio, gross profit ratio, net profit ratio 5 years ago, and what it is today? Both ways comparison is possible. Okay. So basically, why we convert absolute numbers into ratio? Absolute numbers are not good for comparison. Correct? Absolute numbers are not good for comparison. So that's why we convert them into what? Ratios. Then people sometimes have asked me that, but then sir, why you compare? It's a human tendency. It's a human tendency to compare. It's a human tendency to find out whether I'm efficient, inefficient, whether I'm superior, whether I'm ulterior. That you can't stop. Okay. And then obviously from company's point of view, it indicates the efficiency, whether the company is doing well or company is not doing well. Okay. Fine. So let's go ahead, guys. So, yeah. So I hope this point is also clear, that it can compare its own performance, okay, comparing the performance of the company with that of its competitors, as well as with the company's own past performance. Right? Fine. Okay. Now, what we will do in this topic? First, the simple sums. Simple means, in the sense, this is how it will go. Calculate what? Ratios from the given financial statements. That is the first thing. So very like, you'll be given a ready-made income statement, you'll be given a ready-made balance sheet. Okay. And you just have to pick up the values as we did right now. No? Net profit ratio. So net profit is given, sales is given. You just pick up those values, fill them, get the ratio. That's it. Now, a little advanced question. What is that? Prepare financial statements from the given ratios, like going reverse. Okay. Generally, what will happen? Generally, you will feel like what will happen? You will be like, okay, fine, take this income statement, take this balance sheet, pick up the values, go on calculating ratios. But then you know what? It's like a puzzle sort of thing. Means they will give you few ratios, okay, and an incomplete financial statement or an income statement or a balance sheet. And then with the help of those ratios given, you have to fill it up. It's like a puzzle. It is enjoyable activity. If you know the ratios now, it's an enjoyable activity to go reverse and find out all those things. Okay. And then the third one, as usual, calculate ratios and what? Interpretation. Means what? Guys, what you do on social sites? Comments. Yeah, comments, we are good at it, sir. But here you don't have to be you're not going to support, you're not supposed to put comments that you put in something kind like an FBN instead of normal like accounting ratio related comments. Huh? Yeah. So let's talk about types of ratios. Okay. The ratios are classified into three categories. Okay. One is balance sheet ratio. Okay. Friends, calculating ratio, how many numbers you need? Two numbers you need, right? So balance sheet ratio, P&L ratio, and mix ratio. So balance sheet, what will happen, guys? Numerator and denominator both will come from balance sheet. In P&L, what will happen? Numerator and denominator both will come from P&L itself. Array, take the example of the net profit ratio that we just had now for the sake of discussion. The net profit ratio that we had just now. Right? In numerator, it was net profit, and in the denominator, it was net sales. Both numbers come from P&L only. Correct, friends? Both numbers come from P&L only. So that is a good example of a P&L ratio. Okay. Have we learned any balance sheet ratio? Yes. Current asset upon current liabilities. Current ratio. Have you heard of current ratio anywhere? You might have heard. I am like somewhere or the other place must have done current ratio. Current assets upon current liabilities. So current assets are also there in balance sheet. Current liabilities are also there in balance sheet. So a good example, right, people? Okay. So that's how it is. Actually, you've learned many ratios. Oh, in 12th standard. Oh, great. Achha. Chaitra is doing CMA also. Okay. So obviously mixed ratio, what will happen? One number from P&L, the other number from balance sheet. Okay. People are like, oh my God, CMA done. Great, congrats. Very good. Yes, sir. I too had a whole big chapter in first. Okay, fine. So now, friends, now you all need to understand that I'm going to talk about various ratios. Input is going to come from where? The input is going to come from to calculate the ratios. We will need two things: P&L and balance sheet. Correct. So you know what we are going to do. The way we use the terminology in P&L and in the ratios now for P&L and balance sheet, we are just going to revisit P&L and balance sheet and in our own way. Okay. Am I teaching you any legal format? No. This is just arranged out of convenience. When I say am I teaching anything illegal, then you say no, then that does that mean we are doing some illegal activity? No. Just that the format that we are discussing, just that the format that we are discussing is guided by convenience factor and a general presentation purpose. Okay. Because you are, please understand, the whole of the financial management is all about analysis. So basically the idea is that even the one who doesn't understand accounts, okay, should understand it easily. That is the whole idea. Okay, so I again say that this is what I'm discussing with you guys is not a format specified in any standards. It's just for the sake of our convenience, for making it a little more easy. Okay? So let's first discuss that. See, listen, students. I'm writing. Uh, it will be okay if you write a little later. Fine. Okay. So in your notebook, how will you go in notebook? Generally, what happens, sir? You give us some things to write. Correct. Generally, what happens? You give us something to write in that chapter. But today you did not write that. I'm starting with the presentation for income statement and balance sheet. So what you do? You open the chapter. You open your notebook. Give the heading accounting ratios. Okay. Right over there. Give the heading accounting ratios. Hmm? You wrote it. Accounting ratios. Okay. And there you write. You'll be writing like this. For meaning, objective, scope, and types of ratios. Refer JKC notes. Write like this. No harm writing like this. So you should have a flow of the topic. Now see, some people are finding it funny, but I'll tell you one thing. When you revise this topic after 3-4 months, should you not have a clear idea of how to revise? See how we started today. I told you few things from the notes. Okay, see how the lecture is flowing. I told you few things from the notes. Then I'm telling you, okay, that I'm going to show you some format now. After 4 months, when you open your notebook for revising ratios, what you would see otherwise directly, if you don't write this thing, what you would see? You would see some format directly. So it will not go in synchronization. So this is the best way. Okay, if I don't waste your time writing all this because it is already there in the JKC notes. So just what mention in a notebook for scope, objective, meaning, and types of ratios. Refer what JKC. So you know, okay, fine. Whenever you are revising, you read that and then you come to the financial formats. Clear? So this was the first thing that I wanted you to do. Okay, now I will talk about the format. Yes, Uttara, let's go ahead. So we will talk about income statement. So obviously it's income statement, so we'll start from what? Start from sales. Okay. Sales minus cost of goods sold gives us what? gross profit. I hope you all know this. Okay. Less what? Operating expenses. Okay. Operating expenses, what we generally write? We write office and administration expenses. Then we write selling and distribution expenses. And then we write depreciation. Okay. See, again, I tell you that when you write a P&L account, no, you don't use all such classification. What I told you, more than the format, the purpose is to throw some light on the contents and do some qualitative additions. So how this becomes a qualitative addition? Okay, fine. Sales minus COGS is gross profit. That is fine. Now what we are doing, we are bifurcating the expenses. So all expenses which were earlier written under debit side of P&L, same thing, but with some bifurcation. Expenses related to office and administration would be under one group. Expenses related to selling and distribution would be under another group. Depreciation will show up separately. Why? It is a non-cash expenditure. So what we are doing, the same logic, guys. Basically, from gross profit, I'm going to subtract only. I'm not going to add the expenses. But the thing is that we show some classification. You know what? Managements are generally concerned. See, suddenly the boss asks you, the director asks you that this year, how much did we spend on administering our business? See, these kind of questions do crop up from management side. Like how much was our administration expense as compared to sales? Then what would you tell your boss? Wait, let me calculate. Let me present, find out. Let me go through P&L, read. This is administration. This is no, this is selling and distribution. You do that? No. So why you are presenting it like this? So you will have easy reference. All administration expenses clubbed at one place. All selling expenses clubbed at one place. Right? That becomes more informative. Okay. So now what you will get over here is basically operating profit, also known as earning before interest and taxes. Okay, earning before what? Interest and taxes. I hope you aware that it is in shortcut called EBIT. You have always come across this term, right? Yeah, correct. So now if it is earning before interest and tax, then what you will do? Less interest expenses. Once I subtract this, what I will get? This is now it was earlier earning before interest and tax. Now interest is paid, so it will remain as what? Earning before a tax. Earning before tax. So EBT. Alternative, I can also call it net profit before tax, NPBT. Correct, friends? Okay. From this, what we will subtract? If it is a net profit before tax, definitely we will subtract what? Put in the chat box, what will you subtract? Let me see. And People are just typing tax, tax, tax. Monica typed something wrong. Vishal is no people. You should be very clear. Oh, la, la, la. It is a difficult question. Keshav, yes, it is a difficult question. Yes, because people don't understand what they are preparing. No, there's not at all any kind of pun or joke intended. See, guys, you are in which account? Any idea? PNL, we are in PNL account. Income statement. We are leaving aside debit credit, making a vertical statement, but you are where? You are in PNL. So, guys, in PNL account, what do? You pay the tax or you provide for tax? You pay or you provide? Provide. See, that is important to understand. How you can just reply me tax, 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 or like taxes paid. What taxes paid? How can you pay directly in PNL? We have a system, no? First, we make a provision. So we transfer some profit, remove some profit from here and transfer it where? To provision for tax account. Tax, tax. And then when you pay, what entry do you pass? Provision for tax account debit to bank. Correct. So we have to follow that. Correct. Those who have done cash flow statement, absolutely correct. Oh yeah, we have been. I was to come to that point. You see, guys, when I used to read income statement, I used to always tell you, see. This is a P&L account. This is not tax paid. This is provision for tax. So just you need to remember that. Okay, so I always avoid just saying tax, tax, because then people don't have clarity in their mind. Always over here we have to write less what provision for tax. Okay, and then what is left? It will be earnings after tax. That is EAT, EAT, or what? Net profit after tax. NP, right? Hmm. What say people? Clear now? I have given the headings over here, right? Office and administration, selling and distribution, depreciation. So whichever expenses you think of, categorize it and record it over here. We're just writing the brief headings, not writing a elaborated, a long P&L, right? Okay. What we should do after this, after reaching up to NP 80, okay. Obviously, some P&L appropriation activity should happen. Now, I don't know how many of you remember those who have learned cash flow. I'm not sure whether how many of you have learned cash flow because it goes batch wise. If you have learned cash flow, do you remember something working note number 2? Correct. Ah, it is all about working note number 2 now. Means we're talking about we are talking about what we are going to talk about now. Penal appropriation part. Correct. So in my net profit after tax, what will I do? I will add. I will first remove what I wrote. I will add opening balance of P&L appropriation. Correct, friends? Yes, yes, we'll cover that. See, again, people are writing transfer to reserve and dividend paid. Array, my gosh. Guys, what we should say, dividend. Why you don't like proposing? First to propose. Na. I've always told those people who have taught cash flow that in working note number 2 you propose. And then I ask after propose, what will you do? When people start dreaming different things, then I tell no. You propose in working note 2 and you pay in a financing application. Correct people. So that follows over here also. Nothing different is going to happen. Wait, let me complete. So you add the opening balance of P&L appropriation. Whatever total you get, what you do? You say less appropriations. What you have learned as appropriation. Yeah, it's correct. Transfer to reserves and what? Proposed dividend. Correct. Then you take the total of this appropriation, subtract, then what is left is ultimately the balance which will carry forward, right? So what will be left will be closing balance of profit and loss appropriation. Absolutely fine. I told you, see, I happen to refer the topic. So, excuse me, everyone, everyone out there, any worries, just attend this topic. That's the only thing that you have to do. Right, friends? Leave the rest of the botherations to us and to the team management. Okay, fine. So, back to the topic. Yep. So, tell me, people, the simple presentation is understood. I hope everybody understands this, whatever is shown over here. Okay, fine. Now, let's talk about balance sheet. Okay, as I've already told you, less of financial present, less of means, presentation according to compliances, and more of presentation for the sake of making it simple. Okay, right? That is the whole purpose about financial analysis. So, how we are going to present the balance sheet? Let's see that. We can always write all the formalities, balance sheet of dash as of dash. You can write all everything, particulars, amount, amount rupees. Very true. See, generally what you do, you put the balance sheet into two parts, assets and liabilities, right? Okay. But now here, you know what we are going to do? Means, sir, we are going to do debit credit or what? Something different. No. Not that way. But just that our focus being the financial managers related to funds, that is money. Okay. So how I think as a finance manager, I think like from where the money is coming and from where I'm putting the money. Correct. My focus is like this, from where the money is coming and where I'm using it. So from wherever the money is coming, I call it as what? I call it a sources of funds. Okay. And wherever I use the money, a more sophisticated word, application of funds. Getting me? So that means what? I'm going to have two sides of the balance sheet. Instead of saying liability and asset, I would put it like this: sources of funds and what? Application of funds. Yes, correct. Good. I can, those people who are with their videos on now, talking with me as if we are sitting in the classroom. And some people are like, you go talk, you talk. We waiting, sir. It's almost 1.5 hours, sir. So now that we're waiting for that announcement, sir, let's have 3 minutes break. Just our ears are like dying to hear those words, sir. Break, sir, break. So people, everybody enjoys break. Are you all humans? Yes, so we all enjoy those relaxations. Come on, don't be like, I don't need a break. Come on. Then you're like old enough to die. Okay. Anyway, so fine. So let's first talk about balance sheet. After balance sheet, we will take a small break. Okay. So what we discussed, that we will have two parts. One, sources of funds. Other, application of funds. Okay, fine. Let's go ahead. So we are going to say sources of funds. People, I think we have discussed this. Now, I don't know how many of you have attended and not attended the working capital estimation with me. But you remember, yeah, that is, see, you know now that batch wise things are happening, topic wise things are happening. So please don't worry if I say that I had taught and you're not yet done. Please don't worry for that. So when we talked about estimation of working capital, we did talk about financing working capital. And that time also I told you, in the whole world, in the whole universe, on any other planet other than Earth, right? This is telling me how many sources? Only two, sir, only two. In the whole world, in the whole universe, any other planet, we're not even reached. There are only two sources: own funds and borrowed funds. Either use your own money or use somebody else's money. Simple. Correct? That is a basic way we remember. Correct? Okay. So now the same thing will follow over here. Okay, the same thing will follow over here. So how we will present, see, listen to me. Now, what am I doing? I have told you this in a very rough format. Okay, fine. Means there will be two sources of funds. Okay. So I will show you all the headings. You know what happens in the question? No, the same means now one thing is clear. Okay, own funds and borrowed funds. But that own funds now comes by different names. So here I'm going to write all possible names. Okay, so that tomorrow you don't have a confusion. Okay, does this mean own funds or does not mean own? Right? Mahesh, let's talk about own funds. Hi Mahesh. 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 Hi Mahesh. Let's talk about own funds, Mahesh. Okay, so it is called by different names. It is called as equity. It's called as proprietors fund. It is also called as shareholders funds. The one word we normally use, right? Owners funds and also called as net worth, not net worth which you have in mobile, net worth. Okay, so that means I have to remember, I should be knowing rather than saying remember, I should be knowing that it is called by so many names: equity, proprietor fund, shareholder fund, own fund, net worth. So we can club this all and we can say we will call it what? Epsom. Array, for the sake of remembering, this is not issued by Institute of Chartered Accountants of India. Equity, one name. Proprietors fund, second name. Shareholders fund, third name. Owners fund, fourth name. And what? Net worth. Total how many names? 5 names. So we like do a shortcut out of it. Abbreviation, a key term, Epson. Helps us to remember. Okay, fine. So what it will include? What it will include? Now the components. Now these are only the names. Hello, these are not components. Hello, oblique. No, these are only the names. Now components are to be written yet. So what it will contain? So very simple. It will contain equity, share capital. It will also contain preference share capital. Okay. Plus what? Plus reserves and surplus. I'm going to call it RS. Whenever we revise orally, reserves and surplus. RS. Okay, what is reserves and surplus? Can I say they are accumulated profits? Right? So see, it's like that. If the owners to enjoy the accumulated profits, then they should bear the losses also. Correct? So what we will do, we'll say less miscellaneous expenses. Call it any. Okay. So you have to remember this. This will be the components of your all this stuff. Okay. Now the second one. Just now we discussed own money, else's money, somebody else's money. So what do we call it? We call it borrowed funds. We can also call it debt. Okay. If you want, yeah, you can write building. Okay. So I'm not keen on writing the examples. You know it, debentures, bank loan, etc. etc. So total of this now. Okay. The final total of this, total of this. What we should call it. Yeah, people, what we should call it. Sources of funds. What else? What you were searching for? What is the heading you have given at the top? Sources of funds. So when you take a total, what will you get? Sources of funds. Okay. Now, once you raise this money, what will you do with this money? Obviously, you'll use it in the business. Correct? Now, some people must be thinking, sir, this was almost like a liability. Okay, almost like a liability side, sir. Then where goes my current liability? I miss my current liability so much, sir. Don't worry. You've raised your money. Now you invest it. Where would you invest it? You invest in a business. What do you buy? You buy fixed assets. Correct. If you have extra money, you invest it. But you all know that fixed assets cannot work on their own unless you have some amount invested in what? Working capital. Remember, right? So I have to buy fixed asset, but fixed asset don't work on their own. I told you, see, people would be very happy. People always think that you'll be very happy if the fixed assets work on your own, work on their own. So day one of the factory, you only just buy the machines. Day two of the factory, you open and every machine will you will be scared. You'll be shocked to death. Your factory will become famous as a haunted place. So it should run with people around. You should buy some raw material. Raw material should not jump directly from the bags inside into the machines, right? So you have to spend on working capital also. Okay, so one heading is sources of funds. And the other heading is what? It is application of funds. As I told you, where we would apply those funds, where will you use those funds? So the first thing you will buy what? You will buy fixed assets. Okay. Then you may do what? You may do some investments. And obviously, you need to put your money also in what? Working capital, which is nothing but what? Current assets minus current liabilities. Right? So this will be our application of funds. Are you done writing, people? Yes? Okay. Now let's take 2-3 minutes break and then we will resume. what it is, 817, no? Okay, 821. Fine. Okay, people, be back. Acha, what you are saying? Income statement. Yes, I will show definitely. Shahnavi, I missed class for 1 hour. Okay. Evening same. Evening means in the afternoon. 2 to 5. Let me confirm. Hmm. Jahnavi, 2 to 5. Same. But in the first, I have completed only the almost for the first hour. I was completing the homework section of receivable management. So you missed that, or you missed the starting of Acha. Okay. Uh, what? Yeah, I told you they are for analysis. These formats are for analysis. Those who want to have a look at income statement, please note this down. Right. Okay. So see, writing this basically is what? This gives you, like, whenever we pick up some heading, so you're aware, okay, fine, from here I have to take that heading. That's all. Okay. So now that we are set with this, start talking about the various ratios. Okay. So let's come to various ratios. First, we'll pick up a simple group that is known as what? Profit and loss ratios. Okay, first we'll talk about what? Profit and loss ratios. So what does that mean? That the both amounts have to come from P&L or the income statement itself, right? Yep. So let's talk about profit and loss ratios. Trust me, guys, these ratios are the most simple ones, easiest ones. The first one, gross profit ratio. And I'm sure you know this formula. What is that? It is gross profit, which I call GP, okay, upon what? Upon net sales into 100. Simple, friends. Shouldn't be any difficulty. Yes. Samhita has already written. Kamal is asking me a very complicated question. Sir, how the formula came for working capital as current asset minus current liability? What is the logic behind that? Okay, fine. We will talk about it some other time. Okay. Not just now, but yeah, some other time, like you ask, no, sir, please give us some 5 minutes break. In that break, we will discuss all those things. Okay. Okay. Let's write the next one. Net profit ratio. So this we discussed just now. This we discussed just now. What is that? NPAT upon sales, right? Refer to write the full, huh? Samhita, you just written the net profit, which is correct also. But then obviously, which net profit? So we talk about net profit after tax. Okay. So net profit after tax upon what? Net sales. And so net profit after tax, you know what? When we buy hard the things, now we quickly call it as what? NPAT. Okay. Since we're talking about profit ratios, no? Write one more. What is that? operating profit ratio. What is that? Operating profit ratio. So what it should be? So if net profit ratio is net profit upon net sales, or gross profit ratio is gross profit upon net sales, then obviously, sir, operating profit ratio should be what? It should be operating profit upon net sales. Perfect. Okay. Just that you go through the correct. You are right. You are right. You are replying to me in chat box. Absolutely right. Okay, but then you go through the income statement also, guys. Coming. Yeah, here, see, here, and then entire. Okay, see, operating profit means only what? Means only EBIT. Okay, so do write that as well. Should the box over here you write EBIT as well. Okay, friends. Yes, correct. Smart people. Okay. Now, what I would say for all these three ratios, I would simply say that for all these three ratios, that all these means 1, 2, 3 ratios are profitability ratios. Correct? Na? They are talking about the percentage of profit, na? Right? Therefore, what? Therefore, I would simply say, therefore, higher the better. What say people? Is this agreeable? It is a profitability ratio, na? So every time, what is the simple thing that we would say? Sir, higher the better. That's it. Okay. Yeah. Okay. Now, see one important thing. Three ratios, profitability ratios. Now we are going to talk about operating cost ratio. We're going to talk about what? Operating cost ratio, also known as, pay attention, guys, pay attention. Also known as operating ratio. Okay, people generally what happens, they misjudge the wordings, don't read it carefully. See, operating profit ratio is different and operating ratio is different. Okay, so be careful about this. Be careful about this. Operating cost ratio is also known as what? Also known as operating ratio. Fine. So how will it come? Okay. Let me put some numbers. Now let's get into the format and let's try to understand this. Okay, we have a formula which we can always by heart, but applying whatever logic possible so that remembering becomes easy. Let's do that. Okay. Okay. So I take you guys to the income statement. Fine. Okay. Let's take some simple numbers for, as you all know, for the sake of understanding. Let's say our sales is 100. Okay. Cost of goods sold is 60. So gross profit would be 40. Correct. Let's say office and administration expense is 10. Selling and distribution expense is also 10. And depreciation is also 10. Okay. So total operating expense, the total of all this here right over here, na? Minus 30. What will be my operating profit? Will it be 10? What say people? You see, numbers are simple to understand. Correct. Now, with this example, suppose I ask you to calculate the ratio number 3, operating profit ratio. What would you say? So the operating profit is 10, EBIT is 10, and the sales is 100. So how much percent? 10%? 10%, correct people? Okay. So friends, let's first do that. So here, going with this ratio, I would say my operating profit is 10 rupees and my net sales is 100 rupees. So I calculate this. So this is 10%. Now guys, apply a simple understanding. If the profit is 10% of sales, then costs would be 90% of sales. Do you all agree with what I said? If the profit is what? 10% of the sales, then the costs will be what? 90% of the sales, right? Okay. So what are the ways out? See, the ways out is like this. I can always say like this. It is going to be equal to 1 minus operating profit. Okay. Means what? Continuing with this example, 10%, that is 0.1. I hope you all understand 10%, that is 0.1. If you don't know, it's okay. If you don't know, don't tell me that I don't know. Do 10 upon 100. Pratiksha is laughing at me. Nothing like that. See, people sometimes not knowing is not a crime. No, it's okay. So 10%, 10 upon 100. Try it in your calculator. It will come 0.1. Correct? Huh? Thank you. So in that case, what will happen? I'll say, okay, 1 minus 0.1. 1 minus 0.1 would be 0.9. And now, going by that logic, if you want to convert it into percentage, multiplied by 100, okay, so what will you get? That is 90%. 1. Okay. Now, second option is what? So operating cost ratio would be 90%. But you have second option also. You take operating costs upon net sales. Wait. Now see guys, we already know that total of operating cost is 90. Correct? We just have to go to the P&L and locate all those operating costs. Correct? I think it should be very simple exercise. We go over here. We reach the P&L and we know that this is our operating profit. So whatever is subtracted before that is our operating cost. So what thing, guys? What thing would be our operating cost? We will consider COGS as our operating cost. Obviously, sir. Office and administration, selling and distribution, and depreciation. So 60 plus 10, 70, 70 plus 10, 80, 80 plus 10, 90. Right, friends? So if it comes to calculating operating cost, right? Yes. So how would I describe? I would say operating costs is equal to COGS plus office and administration plus selling and distribution plus depreciation. Anything is okay. You say 1 minus operating profit or you say 100 minus operating profit. If you say 100 minus operating profit, then don't convert 10 into 0.1. If you say 1 minus operating profit, then you convert the percentage into points. That's it. It's a simple understanding. Okay. Fine. Yeah. So let's see here. Operating expenses would be all this. When I say operating cost, I add COGS plus them. Okay. Hmm. So one more in the list. Know what I'm going to say? I'm going to say expense ratio. Means what? Correct people, yeah. So pathetic. The day I write any abbreviation, no, people are always sleeping deep down in their heart. Okay, when I discuss operating cost COGS plus office and administration plus selling and distribution. Alright, come on, people. Some street smartness has to be there now. OA is what? OA am I doing? OA. Alright, OA is what? Office and administration. SD is what? Selling and distribution. COGS is what? Cost of goods sold. Interesting characters. Okay. Expense ratio. Hmm? Okay. See, guys, now it depends whether it is admin expenses, whether it is selling expenses, whichever expense is told in the question. What do you simply do? You say expenses upon net sales into 100. That's it. Means, sir, if they ask us administration expense ratio, what will you write in the numerator? Administration expenses upon net sales into 100. If they ask you selling and distribution expense ratio, what would you write? Selling and distribution expenses upon net sales into. Is that clear, guys? Okay, great. Hmm. So basically, what would you say for ratio number 4 and 5? Are basically what? Expenses ratio, correct? Na? Ratio number 4 and 5 are what? Basically, expenses ratio. Therefore, what we would say, higher the better or lower the better? Come on, tell me. Lower the better, obviously. Perfect. Therefore, lower the better. See, all these ratio number 1 to 3 are profitability ratios. So what we have written, higher the better. Ratio 4th and 5th are what? Expense ratio. Therefore, what we have said, lower the better. Okay. So I hope you all have understood these ratios. Simple ratios, guys. Simple ratios. Shouldn't be any problem. Correct? Okay. You're writing all this simultaneously. Yeah. Okay, so what will happen? You will have all the ratios at one place for a quick reference. Correct? Fine. So we're done with one category. Okay, what is that? P&L ratios. Okay. Now similarly, we will talk about the other category. What is that? Balance sheet ratios. Okay. Yeah, and here the commenting is very simple. First three ratios are profitability ratios. So means what? Higher the better. The last two ratios, ratio number 4 and 5, are expense ratios, so lower the better. Simple. Okay. So now we will talk about balance sheet ratios. Okay, so let's go ahead with balance sheet ratios. Okay. Yeah. So we know that we are going to utilize numbers from where? We are going to utilize the numbers from balance sheet. Okay. So the first one, current ratio, a simple and a important ratio. Current ratio. This one. Okay. So what formula will we write for this? See, I told you a simple and an important ratio. This is current assets upon what? Current liability. Okay, this is what current assets upon current liability. Correct. People have written all correct. Okay, only thing is what generally it is expressed as a dash is to one. Hello? Means what? That is 2 is to 1, 1 is to 1, like that. Understood? Generally, it is not expressed in percentages. It is expressed in this form, pure form. 1 is to 1, 2 is to 1. Somebody had written CA upon CL into 100. No, we generally don't convert it into percentages. We just write like that, CA upon CL. So answer is 2, then we say 2 is to 1. Right? Okay. Now, hmm, so what this ratio shows, that is the first important thing that we need to know. Okay. See, the ratio shows ability of company to pay its current liabilities out of its what? Current assets. Correct? Right? What it shows the ability of company to pay what? To pay its current liabilities out of what? Its current assets. Okay. So it basically talks about what? Short-term solvency, or we can also call liquidity. Correct? Okay. Now this ratio comes with a standard ratio. Means the desired ratio. Okay. So what is the standard ratio? Any idea? Hmm. Good. People have this idea also. Wow, wow. Abdul, a slight mistake in typing. Sushma also. Yes, most of your writing correct. Almost all, except two students. Fine. The standard ratio is 2 is to 1. No? Some people have written 1 is to 1, not 1 is to 1. Standard ratio is what? 2 is to 1. What exactly do we mean? If the standard ratio is 2 is to 1, means what? For 2 rupees of current asset, 1 rupees of current asset. 2 is a numerator. So this 2 is for current asset. Then this 1 is for current liability, right? Not 2 is to 1. So what does this precisely means? That is for 1 rupee of current liability, comma, the company should have what? 2 rupees of what? Current assets. Got it? Right? For 1 rupee of, because 2:1 is a standard ratio. Na? So if 1 rupee is a current liability, then 2 rupees will be current asset. So what it shows, basically it shows your ability to pay current liability out of its current asset. Correct, people? What say, guys? Company should always pay current liabilities out of current assets only. Can't it use fixed asset? Yes or no? Very important question. If people are still in the dilemma what to answer this fellow, which is going to catch hold of us. You understand, people? Hello. If people are giving me diplomatic answer, okay, sometimes we can use. If needed, we can use. Guys, my dear friends, listen to me. See, that's what is called as working capital management. Right? You should have enough money to pay your. Now stop. Don't give me that excuse that fixed asset take long time to liquidate. Hold your horses. Wait, listen to me. You should always pay your current liabilities out of what? Your current assets. Always. When the day arrives that you have to liquidate your fixed asset to pay your current liabilities, that's a time to close your company. Okay? Simple, man. That's the time to close your company. So it's all about outstanding wages. So to pay the outstanding wages is current liability. Everybody agrees, right? Okay. So to pay the outstanding wages, you should have enough cash in your hand. Okay? Cash in hand or cash at bank. Or you might have invested money in some bank in the terms of fixed deposits. You might have bought some short-term investments, which are your current assets. Whenever it comes to time to pay to to outstanding wages, what do? You liquidate those bank FDs which you had reserved for that purpose, or you use your bank balance and make payment to them. The day comes where you can't pay your current liability, that you can't pay your outstanding wages, and you start selling your machinery. That's a time to close the business. Did you understand what I said? It's so simple that if I use a car, I should have enough funds to pay for petrol expenses. I can't sell car to purchase petrol. Right? Suppose people are staying in a house, and then wherever now we have a system like cooperative housing societies, they charge us maintenance charges. So I should pay my maintenance charges regularly from my revenue account. I should not be selling my house to pay the maintenance charges. I should always have liquid funds to pay my current liabilities. So I have to pay my current liabilities out of my current assets. The day you can't do that, what I told you, simple, time to close. Okay. See, recently also, we have seen some organizations suffering like that. Recent example was Jet Airways. Recent, still it is more than 1 year. Okay, more than 1.5 year. Such a huge company with such huge assets closed down, primarily attributed to working capital mismanagement. Earlier to that, one more long back, one more such airline was closed down, Kingfisher Airlines. Same law, same thing. Huge fixed assets, huge setup, but a mismanagement of day-to-day cash. So no money to pay to your suppliers of raw material, no money to pay to service providers, no money to pay to pilots. So it's okay now. Assets are there, no flights are there, ground staff is there, network is there, infra is there. Correct, everything is there. But to fly the flight, you need fuel. You need aviation fuel, petrol. So the suppliers are like, now it comes okay in your name, in your goodwill. Initially they pay you. Initially they supply you the oil. They supply you the oil. You have flights. They don't. They say okay, take credit, no problem. But a time comes where the passengers are inside the flight. Flight is not taking off. Why? Because the fuel is not filled. Literally on the ground, it happens like that. The fuel is not filled up. And there is a bargain going on between the company and the fuel supplier that you pay the fuel on at least last 1 month's bill you clear, then we pour in fuel. And then the last few flights gets cancelled because of this. People are sitting inside the flight waiting for takeoff, and then they come to know that flight gets cancelled. They come out. Next day in the newspaper, they read that flight was cancelled not for any technical issues, it was cancelled for not having fuel. Next day, we're not going to book that flight with that company. And that's how the business collapses. Your most important operating income, cash received from customers. You hurt your customers, you have no reason to operate. See, it's so important. When we say cash flow from operating activity, most important cash flow, cash received from customers. If customers don't give you cash, the rest of the cash flow statement need not be prepared. That's the first line to be written in the cash flow statement, cash received from customers. After that, close the topic. There's nothing left out. So guys, this is very important. First, you should be very clear about this, that you have to pay your current liabilities out of what? Your current assets. Okay, don't tell me that it takes some time now, sir, to liquidate fixed assets. That's why we should not use fixed assets. It's not about that. The moment it comes that you have to liquidate your fixed assets, you're gone. It's finished. Okay. Okay, fine. So let's continue. But now there are some other versions of this ratio also. Okay, so that's not all. So we talked about current ratio. Talk about next quick ratio. Yeah, correct. I'm writing that. Also known as what? Acid test ratio. Now, see, you must have understood that what is current ratio? It shows short-term solvency, right? Have you, guys, you must have heard in economics, like some people believe in long-term analysis, right? And some people believe in short-term analysis, right? People who go for microeconomics, Alfred Marshall and all, they say, okay, fine, there is something called as long-term. You read J.M. Keynes, John Maynard Keynes. Okay, you know what? He is a strong believer of short-term. You know, in one of his books, he says, in long term, we are dead. So, how would you analyze long term? Long term is sum of all short terms, na? So, what you do in short term becomes your long term habit. Today I'm tired. I'll not study. Okay, fine. One day wasted. Tomorrow, yesterday only we thought of studying. Today, what immediately? Second day wasted. Third day, we'll work from tomorrow. Fourth day, some other excuse. End of the day, 6 months we have not studied. So there is nothing like long term. Long term is a mix of all short terms, right? Huh? So guys, see this, though we say that it is a short-term liquidity or short-term solvency, it is very important, right? Now see this, I was saying that this solvency is like stringent further. What you are comparing over here, you are just comparing your ability to pay current liabilities out of your current assets. You know what? We are going to make a small change over here. When it comes to quick ratio, it's going to be a little more stringent. So what I will do, I'll say it's going to be quick assets upon current liabilities. Okay, again, this is like dash is to 1. Then I need a elaboration, right? So that what is my quick assets? So the quick assets are the one which can be liquidated immediately. So how would you define it, sir? I say current assets minus stock minus prepaid expenses. See guys, this is always very important. So what am I trying to tell you? I'm trying to tell you that that is stock and prepaid expenses are what? Are non-quick assets. They are what? They are non-quick assets. That is, they can't be quickly converted to cash for paying current liabilities. Very important to understand this. Very important. See what we have written. What we have written. Quick ratio, asset test ratio is what? Quick assets upon current liabilities. Okay, so we are talking about the same point. We are talking about now. Now we are talking over here. What we are talking about? Ability to pay current liabilities. Slight change. Earlier it was ability to pay current liability out of current assets. Now it is ability to pay current liabilities out of what? Quick assets. Why, sir? See, current asset is a general term. Current asset is a general term. It also includes a stock and it also includes what? Prepaid expenses. Let's say you are my creditor. Okay, I have to pay you some money. Okay, I calculate the ratio, current ratio. 2.25 is to 1. Better than the standard ratio. Okay, better than the standard ratio. I have enough for 1 rupee of current liability. For every 1 rupee that I have to pay to you, I have 2.25 rupees of current assets. You know what is happening? It is happening like that. It's pandemic time, it's lockdown time, and the shop is closed. Okay, no selling is happening, and the factory is also closed. So no production is happening. So I have accumulated a stock of raw material. I have huge stock of finished goods lying in my godown, and WIP stands still inside the machine. So what is happening? To tell the people, yes, I have a very good current ratio, 2.25 is to 1. But what is happening, guys? Out of that 2.25 is to 1, out of that 2.25 parts of current assets, a huge amount is lying in the stock. Correct? So you come to my office and you tell, sir, please pay our money. I tell you, see, I have a very good current ratio, 2.25 is to 1. But sir, please pay. Then I open cash box, there is nothing. Why? Because in that current assets, the huge part is occupied by what? The huge part is occupied by stock. You understand what am I trying to tell you? Actual liquidity might be slightly different than the ratio which is told by current ratio. Is that clear? Same thing, even prepaid expenses. Now, some people have a doubt, like, sir, can't you convert prepaid expenses back to cash? Is it possible? Those who have a slightest of the doubt, no, do one thing. Whichever company's prepaid mobile recharge you have done, no, call them and tell them I need the money badly. My creditor is standing on the door. Please repay my money. They would send you the details of the nearby counseling centers. Okay, and you need some therapy. Will they ever pay the money back? Never ever. They would say, sir, ma'am, please enjoy that facilities that we are giving. In simple words, don't be idiot to ask that money back. But that is nobody says directly like that. If you make such call that I am in a bad need of money, please refund my recharge voucher money that I have just morning only. I have not made even a single call. Please, please, please give me back my 600 rupees. Please, sir, 599 recharge I have done, sir. Please. They explain you in a very wonderful way that there's a whole lot of amazing features, facilities we are offering you. In one sentence, idiot, that money can't come back. So to show, yes, you have it in current assets, prepaid expenses. Can you liquidate to pay the current liability, the creditor that is standing on your door? No. So if I have to actually compare, what I will have to do, I'll have to remove those, what? Those non-quick assets. Clear, people, what am I saying? Right? Okay. Yeah. So, okay, here, no, I would always like this for current liabilities. Sometimes bank overdraft subtracted from current liabilities. Now, please write that. Sometimes what bank overdraft is subtracted from what? Current liabilities. We have to still write. So what happens is, because you're making the ratio little stringent, the standard ratio will come down to 1:1. Okay. Now, what is the reason of saying that sometimes bank overdraft is subtracted from the current liability? Okay. What is the reason? You know what? If uh, see, if bank overdraft is there in the current liability, so it depends whether it's going to be quick or non-quick. Okay. If it is not to be paid immediately, it is non-quick. If it becomes payable immediately, then also it is a quick liability. So it will stand there automatically. What we generally assume that it is not to be paid immediately, so we subtract it. But depends upon the data given in the question. If the question doesn't specify that bank overdraft is immediately payable or not payable, so we say, okay, fine, bank OD must not be immediately payable. So we remove it from the current liabilities to be paid. Now we have one more ratio in continuation. Okay. That is called as super quick ratio. right? See guys, here in current ratio, you know what I did? I took overall current assets. General. Okay. Quick ratio. I compared my current liabilities with quick assets. I said, okay, fine. Stock, people expenses. Now, super quick ratio. You know what? I'm not even going to consider debtors also, right? What I say in quick ratio, okay, fine, debtors will pay me in short term, then from that I will pay to current liabilities, creditors. But what if the creditors due is immediately? Then what? I will just take super quick ratio in which I will take only cash bank balances plus marketable securities. Okay. And that I will compare with my current liabilities. That I will compare with my current liability. So with actual genuine, I check my cash balance and bank balance and marketable securities, which I can quickly convert. I hold shares, I call my broker, sell off, I need money. The money comes immediately. Immediately, T plus 2, obviously. But then that is what is a super quick ratio. Okay, where you compare your current liabilities just and just with what? With the cash bank that you have and the marketable securities that you have. Okay. Absolute liquidity ratio, cash ratio, cash reservoir ratio, so many names. Understood people till here? Yes, again the same logic. Bank OD not payable immediately, remove it, right? Akshita. If the bank OD is not payable immediately, remove it. If it is payable immediately, then that bank OD will also stand in the denominator, asking for money. So that depends upon the data given in question. But if nothing is given, then we generally subtract, thinking the bank OD must not be. No, no standard ratio for this. Then the next ratio, stock working capital ratio. What is the name of the ratio? Stock working capital ratio. Yes, in current assets, everything is included. When I talk about, see people, hello, shh. Did you understand these three ratios? You understand how it is gradually slaughtering the concept, going thinner, thinner, and thinner. Right? See, first you just compare your current liabilities. See, it's very important. People are like asking, sir, but everything is included in current asset now. Where do I deny? It's all you need to understand that how you will pay the things. The day you will understand that it's all about the paying of current liabilities, you will be able to digest this very easily. See, you know what? You will never burden with the payment till date, no? So you cannot understand what we are talking. Ask your parents; they will quickly explain these three ratios better than you. See, because it's like after a certain time, I have to make payment of my medical expenses. my grocery bills, rent, maintenance bills, and whatnot. So, and these are all recurring expenses. So the person who sends grocery to my home, my grocery supplier, I can't tell him that I have one flat over here, another flat over there, another flat over there. I have two cars, I have two bikes. He says, buy some kerosene from me, put on it and burn. I don't care. Give me my money. So, see, the first is a very general comparison. Current assets with that of current liability. General comparison, general liquidity. But then the fact continues that even in, though I call them current assets, even in current assets, some are those current assets whose liquidity is slightly low, like stock, like prepaid expenses. Okay, fine, remove them. What other current assets are left? Compare with that. They're comparatively quickly realizable. Make it more stringent. Ultimately, what I'll check my cash balance, how much I hold over here. That's what finally matters, no? When the creditor comes on my doorstep, what finally matters is how much money I have in my pockets. Simple. So there are three ways of looking. So why should see current ratio talks about general solvency, general short-term solvency. Quick ratio makes it compare quick assets with current liabilities, and super quick is very much final comparison. So all ratios are required. Is it like because we learn super quick and current ratio become useless? No, it's a way to compare, right? So I hope you understand all the three ratios, right? Yeah, the ratio actually it goes on getting narrower. Okay, what are marketable securities, guys? Have you ever heard of this term, marketable securities? I think marketable securities will be all those securities which will be quickly converted into what? Cash. Like I talked also, I hold shares, I hold debentures. I call my broker and tell him that sell off those. Come on, I need money. Precisely. That what is, yeah, which can be quickly sold. Yes. Great. Okay. So I hope you make sense of these three ratios, current ratio, quick ratio, and super quick ratio. Now the next one that we talk about is what? Stock working capital ratio. Guys, you can make out some ratio out of this. I'll be very happy if you can make out. Common sense application. Correct. Stock working capital. So numerator is stock, denominator is working capital. As simple as that. Perfect. Perfect. I am getting your answers. Very good. Very good. It's simple. As the name says, no stock working capital ratio. So numerator is stock, denominator is working capital. Now a little more of explanation. Don't laugh really. See, listen to it, listen to it. The working capital calculated at the end of the year, right? So it's a very important question that what should come in that stock? That has to be a closing stock, guys. See, because this kind of questions do crop up in our mind. What this has to be? This has to be a closing stock. Okay, so please elaborate a little more and write a closing stock order. Right? What? Closing stock order. Okay. What this ratio will show? Very important. This ratio shows percentage of working capital blocked by stock. And as we know, stock is what? Quick asset or a non-quick asset? It is a non-quick asset, right? People, what is stock? Stock is a non-quick asset. So how we should maintain stock? We should maintain it at appropriate level, not too less, not too high. What will happen if we maintain it too high? Now, what will be, sir, too high and too low? What do we mean by too high and too low? You know what? It depends upon industry. It depends upon industry. Guys, those who are asking me, sir, percentage should means multiply by 100. Yes, obviously. Do I need to specify that? Sir, if we calculate just like that, no, the answer will come 0.7, sir. And the 0.7 is how much? 70%. Do we all know this? Hello? Why the screen is freeze for so many people? You play that thing. Hey, start it. Will I start doing that? Are you able to are you listening? Are you able to listen to me clear now? The free. Okay, fine. Thank you. So see, guys, come above this thing that if it is 2%, I have to write multi 200. Stock upon working capital. Answer 0.7. That means 70%. Okay. What you should be knowing, which ratio is expressed generally in which form. For example, if it is a net profit ratio, it is always expressed generally in the form of what percentage. Okay, talk about something which will touch your hearts directly. Your marks. How you tell your parents your marks? 80%, 70%, 60%, 40%, 35%. No, let's not go below that. Okay, so let's say your college exam happens, and you score very good marks. FIB, commerce, whatever, first year commerce, whatever. So your university exam happens and you score very good marks. 85% you score. Okay. But today only sir taught us, no? Everything is same. All the ratios are same. 85% is what? 85 upon 100 means 0.85. So you collect your result, you come home, parents ask you, daddy asks you, how much you scored? And you remember, sir, I told us 85% is 0.85. You tell 0.85. And he's like, you failed. No, I have not failed 85%. Then why are you saying 0.85? Sandeep sir taught us 85% is 0.85. See, guys, 85% is 0.85, but there is certain standard norm of expressing ratios. Standard. That becomes a customary thing gradually. Right? Okay. So percentage are generally now see if I convert that 85%, I can also say 85% is 0.85. For that matter, I can say 85 upon 100. Na? So 0.85 upon 1. So 0.85 is to 1. We tell our marks like this to the friends, how much you scored? 0.85 is to 1. Amazing. We never put it like that. But if it comes to profits, profits are always expressed like that. 85%, 65%, 45%, 35%, whatever. Correct? Okay. Talking about current ratio, quick ratio, super quick ratio. They are expressed in pure form. 2 is to 1, 1 is to 1, 1.5 is to 1. So guys, 2 is to 1 means what? 1 rupee of current liability, 2 rupees of current assets. So if you convert it into percentage, what is expected? Current asset should be 200% of current liabilities. But we never say that current ratio is 200%. We never say that. We always say current ratio is what? 2 is to 1. So this is a customary practice of writing a ratio in a particular way, and that becomes a rule. What if I break this rule? Not advisable. Will any legal action be taken against by me? Will ICAI cancel my membership if I write stock working capital ratio as 0.7? No, but then stock working capital ratio is set 70%. What does it mean? Out of the total working capital, 70% is occupied by stock. Okay, you all understand this is a customary practice, guys. See, few things we are also used to putting in a particular way. right? So the same thing applies in ratio also. You express certain ratios in a particular form. Okay, so whether you write into 100 or you don't write, if you write into 100, you will get 70%. If you don't write, you will get 0.7. Okay. Oh my God, so many messages. I did not notice on it. So what this ratio shows, it shows the percentage of working capital blocked by stock. What is stock? Stock is a non-quick asset for sure. Okay. So see guys, your ratio should be optimum. Remember that. Now, now you people are going to ask me, sir, what do you mean by optimum? So I would always say the optimum depends on industry in which you operate. Okay. Why I'm not writing any percentage for optimum stock working capital ratio? I can't. It will change from business to business. Means suppose you're a milk dealer, Dudwala. Okay. You're a milk dealer. What will happen over there? Tell me. How much stock will you keep? How many days stock will you keep? You'll keep 2 months stock, raw material. No, sir. If you start keeping 2 months stock, no, we will not be able to sell milk, but we will have to sell milk and milk products because that milk will get spoiled. And then we will convert it into curds, and we will have to probably convert it into ghee, butter, and we'll have to sell. The only seller of milk will not be able to stock even for more than 24 hours. Correct. Milk products, shelf life is little more with the facility of refrigeration. Okay. Now, can you compare stock working capital ratio of a milk seller with that of a furniture mart? These two businesses are north and south, right? One business, milk seller's business, cannot have any, means they cannot store their goods beyond a limit. And for a furniture mart, it has to be like he has to keep ample of furniture available. Nowadays it's like furniture malls are there, big, big malls are there. People go there, people see the furniture. If it is a bed, people sleep. If it is a table, they try writing. If it's a sofa, they allow their kids to jump on there. See, once it comes home, then they will tight slap if the kid just goes on, stands on the sofa. But when they go to the mall, they will like jump from, okay, now that sofa is jump from there to the latest take the screen. There, see, there you have to keep more of the stock available. So how we can club all the businesses in one standard ratio? Not possible. That's why what I told you, optimum will depend upon what? Industry standard. Okay, so we cannot have one standard optimum ratio for everybody. You got it very clear? Huh? Okay, fine. Okay, friends, let's do one thing. After this ratio, let us stop. How much? What's the time? So it's a good. So we don't know the watch, sir, but it's a good time to stop. Screenshot you want, Vimal? You not written the things? In case. Yes, please, in case you're not written. Ah, this is your income statement. Ah, okay. This is your balance sheet. Okay, so people have instructed me you should not allow more than 5 seconds to take a screenshot. Okay, fine. Thank you for the updates. No, no, no. Stock working capital ratio, Jay. Lower ratio is better, is bad to say. Optimum is better because lower ratio will, you will not be able to sell the goods. See, this is a dicey situation. Putting it below the limit is also a problem. Putting it above the limit is also a problem. How many pages? One more page we have, Kamal. And Kamal is raising the hand. Okay, 1 minute. Huh? Just this much in this ratio. Done, na? Yeah. If less stock is blocked, liquidity will be more. But then what, guys? If you in the search of liquidity, Jay, in the search of liquidity, if you keep too low stock, then your customer comes. Then what you will tell him? What you want to buy every time? Huh? See, I'm keeping so much money in my bank account. I hardly keep any stock to sell, but I keep a lot of money in my bank account. I maintain high liquidity. So it's a dicey situation, right? You just can't go below this optimum also. What is the optimum? That you learn by experience. You run a shop and you run by experience. Okay, if I keep stock below this level, I have to send up my customers back. And if I keep stock above this level, then unnecessarily the stock is lying in the godown. What do you want to ask, Kamal?
Good morning, sir.
Very good morning.
Sir, how the formula came for working capital as current assets minus current liabilities?
Super. You had asked this question and I told you, not a time to
Yes, sir.
discuss. Have you attended estimation of working capital?
Yes, sir. I have attended, sir.
Okay, great. How it comes? Tell me. You only tell me. What do you have understood by working capital?
Uh, to run our day-to-day business, we need money, so we kept some money to do our business.
So basically, see, I have to have some operating assets. Like I have to
Okay,
invest
sir.
money in buying the raw material. I have to invest money in producing the finished good. That is called as WIP. Okay, after the goods are ready, still you have to keep some money available. Still you have to keep some finished goods stock. So see, imagine as if you are running a store. Imagine, to understand, imagine that you're running a store, stationery and general stationery store, grocery store. Okay. So what will happen over there? You run that store, fine. So you need to stock everything on your shelves. For that, you need money, right? Then, if you produce something, suppose you're a manufacturer, so something will go in WIP. Finished goods you have to pay, right? Then, other than that, you have to have some drawer, some cash in your business. Other than what customers pay, that will come afterwards. But before that, to finance all those things, you need money. So I calculate for raw material, I need this much money. For finished goods, I need this much money. For making payment of rent, I need this much money. Prepaid expense. The owner of the premise is saying, first you pay this money. So I calculate all that. This much money I need. So I total up all my current assets. Okay. They are around 5 lakh rupees. So I need 5 lakh rupees to pay off, to buy all these current assets, to buy this raw material, to invest in finished goods and so on. Now, as I give credit to others, some people are also I'm buying, say, for example, raw material I'm buying. I'm saying that I'm buying raw material equal to 1 lakh. I need to have that 1 lakh rupees. Let me arrange it. But then I have a word with my supplier. I tell him, see, I'm giving credit to everyone. You also give me credit. So my creditor says, okay, fine, you pay me 1 lakh later on. Now, the moment he says that, my working capital requirement is reduced. Instead of arranging 5 lakh, I will arrange 1 lakh. I'll reduce 1 lakh and arrange 4 lakh. That is what is precisely working capital. Current assets minus current liabilities. Okay, then let's stop for the day, guys. People are looking for my laptop charge. Chalo, bye. We'll close the topic. Komal, think on this once again. It's like we are open to discussion. Long time. We can always discuss in every lecture. Okay. Chalo, bye bye. End the lectures. Bye 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 bye.